Hello, hello.
Hey guys, how's it going? We're here with Josh Schuler.
Hey gang,
Um,
happy FOMC day.
oh yeah, everyone loves FOMC Day.
May the rates ever be in your favor.
We've got the two Joshes today. Josh and
We
Josh.
do. Josh S's actually. Yeah. So Josh Schuler here. You guys might already know him. He's been around quite a while here in this future space. I believe Josh started in institutional trading, and now he does both his own retail trading. I believe. Do you have your CTA, or you used to be CTA?
I have an exempt CTA.
Okay. And then as well, he's just extraordinary, I think, at teaching as a basis for most of his strategies, volume profile. Would you say that's correct?
Yes, volume and market profile. So we would distinguish between the two.
Awesome. Yeah, I'd like to just kind of dive in right away. Maybe first you can kind of just say what you've been up to recently, just in terms of trading, and then we'll maybe do some screen sharing and dive into particulars.
So two things that we would always talk about, like early on when I was getting into markets, and my background was with RG O'Brien, which most retail traders aren't aware of. We primarily served like agricultural producers. So if you're a farmer, you know who RGO was. We would hedge live cattle and soybean and corn and really weird things like Minneapolis hard red wheat and stuff like that. But couple kind of key principles is one, like not every price is actionable, meaning that like not every price, like even if a market's moving and there's something going on, it doesn't mean that I have to do something there. And in fact, like not every price is as meaningful. So, there's really key prices that I'm looking to be active at, and other prices that I don't really care about. At the same time, there's different times, and a time could be time of day, it could be day of the week, it could be like macroeconomic cycle. It could also be just where we are in the year. And like right now, we're in this kind of from July 4th to August OPEX is like the worst time to try to day trade. I think that there is historically. So like in terms of like, what am I trying to do right now? Right now, I'm trying not to do a whole lot of anything. Like I'm interested today to see what's going on, because we've got this week with FOMC today. We've got Microsoft Meta after the close. We've got Apple Amazon tomorrow after the close. It's month end. So there's a little bit of stuff that could like cause things to move, but I think there's also tariff deadlines tomorrow, something like that. But other than that, we're kind of waiting for better times to be active. So that's where it's really important to know your playbook and like know what is your trade, so that you know whether that trade's in play or not. And one of the things that can impact whether your trade is in play or not is, is it the right time? And so that's what we're looking at right now.
So you're you're trying to see if these events start kicking off some volume for you before you start getting involved.
Yeah. So I mean, I think all auction behavior. So like, and if you haven't thought about this, when we look at these lines, these squiggly stuff, we're really just looking at a visual representation of an auction. They're continuous auctions, and auctions operate based on the information that they have in them and people's perception of value. That will tend to, absent of new information, kind of coalesce around an agreement of where value is, and then the markets kind of stall. So, the whole idea of like, markets either trending or consolidating, or it's directional or sideways. In auction theory, we would use the terms balanced or imbalanced. Given that we have quite a few binary events in short order here, it's not a great time to expect that like take big directional bets yet, because there's information that's going to come in, and then people will decide, oh, are we priced right or not? And then that will cause the move that we can do something with. In the meantime, you're just sitting here, letting somebody else take that first bet.
Right. So those seasonal patterns you're definitely taking note of. So what sort of, I know you would like to, we've talked before, and when you're working with newer traders, that are working with you, you kind of narrow it down to let's focus on one or two strategies.
Yeah.
Where do you start with that? Like right now, again, you're saying don't look. You're saying kind of stay off the charts a little bit more until something of note comes in to try to catch maybe something that's more of a continuation on a trend.
Yeah.
So how are you differentiating there between when that's happening?
Yeah, great question. So a couple things, and I think this is actually a benefit for anyone who's looking to be active today relative to just 10 years ago. I mean, what's the width of the NASDAQ today? 92 points. So we, in July of 2015, the NASDAQ was 50 points wide for the month. Like, there's significantly more opportunity now. There's greater, more persistent volatility just because of the increase of 0 DTE options. That's really helped that out to keep more persistent volatility even in times when it's less active. So the width of the markets are wider. That's really good. But as far as like where I typically start with traders is trying to tease out the difference between a narrative and a playbook trade. So, and what's the difference of that? So people will put together one of the things that they find out, kind of early on is, I got to have a plan. I got to like, where do I think that the market's going to go? So they write out a plan and has certain prices of like, I think it's going to go here, if it's above here, if it's going to go here, if it's down here, and here's where I think the ranges could be. That's all really helpful, but that's not a trade.
Sure.
That's just context for where you might find your playbook trade. And then, next to that is like, what is that actual trade? Like, what is that that idea that I can express over and over again with inside that context? And so like I think about your guys' platform, one of the things I really love about the futures desk is the ability to have and save setups, and then you can apply those to, individual trades and kind of group and categorize those, which is a lot about how we, from a professional side, when we think about a trade, we're not looking at specific entries and exits because typically we're kind of moving in and out around kind of a broader playbook idea. But that part is hard for people to get to because most of the publicly accessible information about what a trade is based on a triggering event. So if you ask somebody, I do these like every week. I set up, like if you go to my Twitter account, I have a link that's open for people to just do like free, 20-minute, 30-minute audits. I'll give them feedback and kind of where they're at.
Great.
And I'll ask people what's your trade? What's the last trade that you took? And what drove you to be in that idea? Almost always, and I would say I've done hundreds of these in the last couple of years. Almost always they are, well, this thing happened, like there was an order flow spike, or years ago it would have been like this moving average crossed this moving average. Well, those say like what's happening at the price, but it doesn't say where price is going to go. And one of the things that we are taught all the time on the institutional and professional side that is discounted on the retail side is that you never take a trade unless you have a thesis or hypothesis on where the price is going to go. So like first trade is figuring out where the destination is, the likely destination. And then you use the, what people would typically look at as their opportunity is like, that's the trigger. That's what helps me defend and establish risk. And I want to make sure that makes sense relative to wherever I think that specific price is.
I see that a lot. I mean, we're obviously discussing similar situations as coaches for a lot of these traders.
Yeah.
And it's very hard. Traders will hyper focus on the signal, which I think is your point for like a moving crossover.
Absolutely.
And then they'll forget about the narrative, or they'll do the opposite. They'll be like, FOMC's today, and I think it's going to be like good numbers, and that's what they're trading off of. And then they skip the signal. Now they're just looking for, or they're just obsessing so much about the signal that they're just like the moving average crossover. That particular oscillation is all that matters. And getting them to kind of pull back and be like, look, if you were a musician, you'd have to pay attention to who's the audience, what's the venue,
Yep.
Knowing the chords alone isn't going to be the whole picture of what you're doing.
Absolutely. Yeah, that's absolutely right. And it's not an unusual challenge, right? It's the stuff that's all the indicators of all these platforms are built around kind of figuring out these triggers. And it's not that they're not useful.
Sure.
They can be if they're in service of a destination. And that it's that it all, and you've doubtless seen this behavior too, is where if your life is driven by signals, well then, okay, I get in the signal, and then, well, how long do I hold it? like when do I get out? And then inevitably, like, they'll get some green shoots, they'll take it off, and then it, maybe this thing just keeps running, and then they'll say things like, well, I just left so much money on the table. They're like, no, man, you didn't leave any money on the table. Like, you only left money if you had actually, as part of your trade, the actual trade itself had that specific price as a destination in mind, and there was nothing to say to get out of it, and then you got out of it beforehand. Like, that would do that. Otherwise, like, you don't know. And then the other piece of it is, if it's based on the signal, okay, now I'm long. Well, now the signal's short. Now I'm short, and now I'm long. And then you just get pushed back and forth this way. Where if it's in this, I'm looking for some certain destination. Okay, I got the trigger. I got in the trade. I got stopped out. Is the conditions or the opportunity still present there? Yeah, that's in a specific direction. Do I find another trigger that goes in that direction? So I'm not going in this like back and forth thing because I'm anchored to where I believe that the auction needs to go.
Right. You're just trying to, how do you take part in this auction with a appropriate risk protocol? Yeah,
absolutely.
So when you, so run me through, you've got a newer trader, the bulk of the traders coming to us are beginner, intermediate, we're striving to get the more than that, but that is most of the audience that's listening today. Yeah. So if someone comes to you and they're interested, they have some basics about the markets, maybe they've done some strategies that were 100% objective. Maybe obviously with those kinds of strategies, they tend not to give the kind of returns that they want. And you're trying to now be like, okay, you have a basic understanding of the market. Where do you take that trade? What do you show them first? Do you want to like pull up some screens even to kind of just show like, this is how I would show them to look at the market in a basic sense?
Yeah, absolutely. And we could go to screen as kind of a place to start, and we'll try to make it as simple as possible. So this is the chart that I look at most of the day. If I'm looking for a directional intraday trade, this is what I'm looking for. So let's kind of walk through like what is all of this. So over here on the far right, I get my John Madden illustrator here. So that is the composite value or volume profile of the last 5 days. So it's basically like where's weekly value relative to this thing. This is the current developing profile for the whole Globex session. So that's cash session and overnight.
And just so some people might be a little confused because they haven't used TPO charts before. Yeah. But if you could just like circle each one of those and just everyone, that's just a day at a time.
Yep.
That represents
a
day.
So this is 1 day. So this is today, right? This is yesterday. This is actually the current developing weekly volume profile, and like this is the complete one back here. So one of the challenges that we have as traders is you're making a trade on an intraday basis, but you're trading with participants who are trading on all different time frames. And so people will say, well, why use market profile or a volume profile? Well, because, and I think Brian Shannon, if you guys follow him or don't, you should. Alpha Trends on X. But Brian wrote 2 pretty seminal books that are in my library. One is Technical Analysis Across Multiple Timeframes, and then Anchored VWAP. He's kind of like the godfather of bringing Anchored VWAP from institutional side to retail. Mm-hmm. And he would say only price pays. And what he means by that is that the only indicator that every participant sees is price. Right? Like you may be looking at a tick chart. Someone's looking at a Renko chart. Somebody's looking at a 30-second chart or whatever. Somebody's looking at a daily chart. But the only indicator that shows up on all of those charts is price that they can all see. And they're all making decisions around. Mm-hmm. what I think is so powerful about profiling the auction is you're arranging that price information to see where participants have favorable prices or unfavorable prices. So like this is a fair price or this is an unfair price. And that's meaningful because basically every decision that's made in investing is it's like a price to value relationship. So I can see where the current price is. Well, what does that mean relative to value?
Yeah.
And that's, this is value today, which also happens to be value for the last 5 days. But that's a little bit above value from last week, right? And then if I go down to like value for the last 20 days, that we're above that. Now I can start to make decisions on where I'm looking to go. And then there's like a foundational question. Wherever price is going, okay, is value going to follow price or does price return to value? So, now we're kind of into lunch. That's why this is now in red here. It's just a visual feedback for me to be like, hey, don't do anything until we get out of lunch. But price is moving away from current value for the day. How could that change? Well, if we continue to move up here and we build out more time and volume at these prices, we could actually shift value higher. That would be value following price. But guess what? If I can't do any more business up there, where am I going to go? Right back there.
Sure.
Right. And then that can extrapolate, to larger time frames. So like today, especially with FOMC, I mean, I've been watching this, 486 price all day and really kind of, let's say 50 points on either side of it, because based on how we interact from FOMC, we're either going to go retest these highs or we're probably going to push, back into this area. But it's going to be from this area of value. So markets, price moves away from value and either value catches up and is an agreement or the market goes back to value.
Okay. And just to kind of bring back what we were talking about earlier, where would you categorize this in your narrative to signal groupings?
Yeah. So this is like, even what this is saying right now is this is telling me contextually where we're at. Like we're balanced with what I'd call near-term value. We've got 3 days where we have prices overlapping each other and the market's waiting for new information, which is going to come in the form of this catalyst here later today. So, I know there's something coming in there and you have to start thinking like a market participant of it's a binary event. What does that mean? It means there's going to be one of two reactions from this thing and nobody knows which way it's going to go. I mean, there are very few instances where it is a little bit more clear than others. But most of the time you don't know. And so what I'm waiting now is I'm waiting for some information to come in. So then like in this context, like what do I do in terms of like turn that into a trade? Let's actually go and look at, I actually queued up yesterday as a replay so that we could take a look at that. So here's kind of like where I like my contextual start of the narrative is always looking at the relationship of price to value over a couple of different time frames. So one is here's the current price. This was before the open yesterday. Here was value for the last 5 days as it was yesterday, and then here was value for the last 20 days or month. And these three variables I look at every day because there's about 9 orientations of these three variables, and that kind of tells me, okay, what am I kind of looking to do? If I've got price above the 5 day and the 5 days above the 20 day, I'm not looking to push further in that direction because you can see what's happening is that see how there's like a taper in volume as we go across those time frames. It means that we're just running out of people to do business at those higher prices. So could we go higher? Sure. Is it likely to go higher? Not real great. It's more likely that we would either go sideways or lower to try to find participants. So that kind of helps, but then I have to still have to turn that into a specific trade, right? So let's go look at
those were anchored VWAP positions that you're showing on the higher time frames. So
yeah, all of this down here.
Mm-hmm.
Yeah,
so those are still developing anchored VWAP. They're not previous at all. They just happen to be flat because you're just showing the last price.
That's a weekly anchor. I always look at the anchored VWAP for the week. Again, anchored VWAP is a reference that every participant can look at regardless of their time frame. And
Sure.
people are
same
making
thing.
Yeah, they're making decisions like why do I have weekly high, prior weekly high, weekly open, prior weekly close, prior day high. Like those are references I think that should be on everybody's chart. So like if they're not on their charts, we put them on their charts because you will watch how often the auction reacts at those prices because so many people look at them.
I often look at. I think there's obviously a point where you can just saturate your chart with way too many
totally
critical points, but I think it's more favorable to have more exit points based on reasonable measured moves of recency, just in general. What's the market generally been doing? I think we can have, there's a reasonable, we have the same amount of volume as the previous days. There's a reasonable opportunity to get into this range.
Yeah.
What's the largest point of interest that I should probably just take off some of the risk? But for entries, you got to clear it up.
That comment of like reasonable, Josh, that is so people don't value that enough. Like that's a really key statement because there aren't guarantees in markets. So essentially, all we're trying to do is stack probabilities.
Sure.
Right.
Yep.
And how do you stack a probability? Is that you go, okay, well, it's not a guarantee, but I mean, I can build a probability of what the expected range should be today or the next day. So in looking at my plan or what I'm expecting of this, I'm going to build it around 250 points of expected range. I'm not going to build it around 500 points.
Right. Yep. Exactly.
Right.
Yeah.
So that's spot on.
So yeah, sorry to interrupt you.
No.
So we've got a narrative going. We have values building higher, and it's starting to taper off here. It's been going sideways the last few days. We've got a range. We have a news event. That's sort of the context of what's going on now. So let's get into how do you turn this into an actual trade idea.
So here we are before the open yesterday. Okay, and so here's that 5-day value is down here and in 20 days below that. So we're above that. That we're in the cheap seats where I'm not looking for not that market can't go higher, but I'm suspect of it because you're just running out of fuel. And that's one of the things that's really helpful about looking at volume analysis this way is if I don't have some it always cracked me up. People that were like the diamond hands or like I'm going to hold on to this stock and the Wall Street bet deal. Like, gang, if no one else buys at higher prices, the price won't go higher.
No, I get it.
You have to have more buyers up there. So here in this situation, the prior day was a rotational or balanced day, and the reason we look at market profile. So if I've got market profile on the right and then volume profile on the left, look at them in tandem. So volume profile tells me acceptance at price. Market profile tells me acceptance in time. And you can better identify structure of the day, what open type it was, what day type you have. There's in that nomenclature, there's 5 open types, 7 day types that we can kind of build trades around based on what we're seeing. So in this case, here we are. This is the overnight profile. So we have a gap, right? So we're gapping above the prior day's range. That means I'm going to have a directional open. A gap in a new territory is a directional open. However, I've been moving higher for several sessions, and we're running out of steam. So one of the playbook trades that I have is what's called a third session or third period reversal. So if I have 3 days higher and I'm stretched kind of across this composite volume, I'm looking for the market to, even if it opens in a gap, I'm watching for it to fail. And if it's going to fail, where is it going to fail to? Okay.
Sorry, one question I do have. So price is rising higher and we're seeing a tapering effect, and that volume at the open would be based on an overnight inventory situation. So at what point are you determining sort of the relative volume and what the makeup is of that tapered area is considered tapered, as opposed to like you need it to develop till 2 p.m. in the afternoon? Before you really understand where volume is being distributed. It's a
little bit subjective. So this is where people that will look at volume profiles will talk about like a value area. So if you see the color here, the color difference, basically looking at it as a distribution. So 70% of the volume is within the green area, and then your tails are in the gray area. So if we're out in the tails, I can just visualize and go, okay, yeah, I'm out here in the standard deviation of volume. That's a way you can measure that. It's not like a set, like, well, I'm at a certain relative volume. There's other ways to look at that.
But the intraday, sorry, I guess I meant the weekly. We have a better picture because there's been more auctioning. But what about on the intraday? So you're putting a lot of weight on the overnight session. Would that be fair?
I consider that because it's all volume, so you got to consider that as part of what you're looking at. Now you'll notice here on the screens I've got RVol at the bottom. So I'm looking at relative volume for the session. So this would be for the full Globex session over the last 30 days. Which, typically, if I'm under 100% of RVol, because you're already in summer where things are tapering session to session anyway. Like that's a spot where you just want to be more cautious and careful.
Okay.
But in this case, so if I fail to hold the gap, the question is, where to? Which is like if I'm a build trade. So that's pretty easy. I'm just going to go right back to the prior day's most traded price. So this price right here at 494 is where I'm going to go if this thing can't hold new ranges.
Okay, and then so that's the point of control.
Yeah, it's the prior session's point of control. It's also kind of the first composite reference in that relationship of price. Does price go back to value or does value go to price? Well, if I can't build out more value here, I'm going to go back to the first reference where there's been some participant acceptance, and that's going to be that 494. That's that prior days. So at the very least, target number one is going to be here if I fail to hold the gap. Okay.
So let's get into that. What would start to look like fail to hold the gap?
Yep.
And how can you get an early enough entry to have a good risk proposition?
Yeah,
not on
absolutely.
risk at all.
So a couple things to notice here. So this red on the overnight, that's the euro initial balance. So that's the first hour trade in Europe. We look at that because the SPX starts trading options at the Euro Open. That often can be kind of a telltale sign of where control is. So I'm already kind of identifying Euro IB low, that if I get below that price, that's going to start bringing in some more selling. And then I'm also looking at the ETH VWAP. So if I start to see acceptance below ETH VWAP, below Euro IB low, below halfway back of the session, those are the initial conditions that are going to start to drive this thing towards failure and give me confidence to get in. Which, now this is the part that developing traders struggle with, because developing traders want to find the tops and they want to find the bottoms. And gang, like the most high probability trade is not picking tops and bottoms. When you're picking tops and bottoms, you have the least amount of information.
Sure. Right?
I mean, if you think about, and Josh, I know you know this, but like the marketing adoption curve, right? Like Rogers curve. You've got the innovator out here, and then your early adopter, and your early majority, and your late majority, and your laggard.
Right.
Like
the second half's just full panic usually.
Yeah, like the innovators, they're the first one in, but they're the ones that are most often wrong.
Sure.
Right. So what I'm looking for these failure pieces, I'm already noticed, like I'm already in my head, I'm like, okay, I know if we fail, I know where we're going to go to. Now I want to see some of these other behaviors before I start looking at a smaller time frame and start triggering and really tightening the risk.
Right.
But the first part is I've identified where I'm going to go. So here we are. We're going to,
and not to mention, and I'm seeing some people in the chat talking about it. It's still reversal trading if you don't get in on the initial tick. That is the highest tick of the day.
Yeah.
The point isn't that it's not a reversal trade. What he's talking about actually is a multi-day mean reversion. But just to basically say, okay, everyone's been buying, but I know right now is the sell point. It feels amazing when you get it. I get that. And that's a rush, and it hooks traders. And once they do it once, they think that's the way I do it, and I can predict levels and I'm perfect at it. But realistically, you have to set your expectations again. If you're going to be looking for tops and bottoms, expect your win rate to suffer dramatically.
Yeah.
And low win rates means high losing streaks as well. So
Yep.
Just set expectations. You can do it. You could do a 1 to 200 R trade and be wrong 50 times in a row. But there are some profitability to the numbers with all that stuff. It's just gauge your expectations. You're not going to do 80% win rate and get the top and bottom every time.
Absolutely, man. Preach. Yeah, you don't have to be first. Like, let somebody else take that risk.
Yeah.
Like, and see how it goes for them.
Of impact. That's where the volume comes in. Like,
yeah,
someone actually putting real cards on the table.
Absolutely. So let's dive into this thing and like watch this trade develop a little bit here. So I'm gonna start playing this back. So like right now we're into this gap, right? Like it's holding, no sweat, no problem. Let me speed this up so we're playing.
And what time is this? Is this morning?
This was yesterday morning.
Yesterday, okay. Sorry.
Yeah, we're looking at yesterday's morning. So we've got in our head, hey, if this thing like right now, there's nothing that says that this is going to fail. And the math is like if I'm above ETH VWAP, if I'm holding halfway back, if I've held this gap for an hour, the probability that it's going to close just really starts to diminish, right? So I use a lot of alerts because I'm like, well, I know that some of the prices that we need to get to fail, are we near those?
So just to annotate or describe what's happened, could you sort of describe in real time what you're seeing?
So right now we're just watching the opening of the auction in the cash session, and looking at a couple things I'm watching initially. So first is the opening range. So and I hear that term thrown around a lot. It's kind of a pet peeve of mine. So like when we talk about the opening range, we mean the first 30 seconds. That's the actual opening range. Like that's what the CME marks is the opening range. So if you're like, hey, I'm building a breakout trade on the opening range. If you're not talking about the 30 seconds, then that's not the opening range. You could say, I'm building a trade off of the first 3-minute period. Cool, that's fine.
I see 15-minute a lot lately.
Yeah,
or whatever the orb strategy, the first 15-minute.
Yeah, they'll say it's an opening range. It's not. It's a first 15-minute, and which is we can talk about that. Too. It's helpful because it's causing you to wait and see some structure develop before you step in, right?
Structure with volume. If we're just looking at it from a volume perspective, which I do tend to, not everybody has to. This is just a great way to do it. When you're talking about pre-market volume, that structure is going to have a lot of less validity other than at the extremes. Compared to the first even 30 seconds of typical market open. So
totally, and that's why I look at this this ETH volume profile for the full session when we're at the open. Is there some imbalance to it? How is that going? And right now, so far we're accepting higher. The point of control for the full session is here. And at some point, the cash session will kind of overtake that in terms of importance. But right now, we're just kind of leaning on that. We're just letting it go.
Are you paying attention right now to not only necessarily the VWAP, which would be over time, but how are you using the developing intraday volume profile? Are you paying attention to the heavy volume nodes? Are you watching those kind of build?
Yep.
Okay. And is that sort of discretionary, instinctive at this point? Or are you pulling out like, no, here's an actual, like I'm looking for a certain quantitative amount that you can use?
Yeah, it's not like this many contracts per price. What we're looking at is, so in a market profile graphic, you have 13 periods of the day. So how many of those are in overlap, and how many of them, like if we're at a directional day, that whole this graphic is going to be a lot thinner. Right? If it's a rotational day, it's going to be real fat because I'm trading back and forth across the same prices. Well, here I don't have any of that yet. It's just this is the initial balance. So this is also like one of the things that I have a developing trader first start to say, hey, look, until the first hour of trade is done, you don't do anything. Which that's it's really challenging for people who are like, well, but there's so much movement in the first hour, I should be doing something. You're like, yeah, but if you can't express that with edge, you're just hiking your risk and you're increasing your probability of failure.
Sure.
So like let the thing develop a little bit more and you'll get a better idea of like where where is this auction, accepting value or not? Okay, so like now let's pay a little bit more attention to it. So what's happened? We opened in this gap. And this is a period. We pushed above the opening 30-second range, away from where developing value was, and then within the first 15 minutes, we're like right back through that open. So let's now go look at this chart on the right. In fact, we're gonna kind of focus here, because now I'm now gonna look at a little bit more information. So some things that are happening here. So one, notice that I'm back to that each HVWAP. I'm also into this single zone. So this is something that, again, you can only see in a market profile graphic that you can't see in just volume profile alone. I can see that there was a period in the Euro Open that we only traded those prices in one 30-minute period. Mm-hmm. We call it a single print. It's another way of thinking about it like a mid-session gap. So how did those happen? Is because there was some impulsive action that took place. And in fact, you can actually see like this highlighted blue line or green line there is a order flow imbalance. So there's 300% buyers to sellers at that price. Okay. So that's
one thing I've always kind of curious about is, what do you do when there's not necessarily, I guess, divergence or dissonance of, there was a short amount of time there, but what if there was a lot of volume during that time? Now, what do you go with?
So let's talk about, like, if we look at back here. So here is the area where those buyers stepped in. So now what's happening is, and I also spent several hours kind of trading sideways. Auction tried to move away from that value. Now it's come back. Mm-hmm. What's the most likely behavior next of this auction? So we just found out information that we're most likely not going to be able to go higher. So now we have confidence to go explore this direction and see if the buyers that caused these singles will step in or not.
Sure.
Right? If they don't, then what's next? I've got that prior high that closes the gap, and then I'm back to my target. Right. So at this point, I'm going to go look at a triggering time frame. So I have this kind of perspective. So now I'm looking at, this is the time frame that I look to trigger into a trade at. So I'm looking at 30-second, and I've overlaid 30-minute volume profiles on top of that. And then I've got these numbers that you can see here are like contract. It would be like a delta profile, but it's an imbalance of buyers or sellers, because I want to see, like, if I'm going to get into this, what do I want to defend?
Mm-hmm.
Right.
And also, you're sort of saying with the delta, you're kind of leaning into aggression is more correct.
Absolutely. Like, you want to get better excursion when you enter with someone else who wants to go in that direction with strength.
Mm-hmm. Yeah.
But that's not.
Do you find that? Do you use that same? I tend to put more weight on that for the equities. I found when I'm trading other markets, I might have a little bit less of an aggressive, obvious direction correlation.
Yeah.
Where as opposed to, I'm looking at oil or gold, some of these have a lot more passive participants.
Yeah.
Do you find those? Do you make any adjustments for that, or are you pretty much like, no, it's the heavy aggression regardless?
Well, yeah, the heavy aggression regardless, because an order book is an order book. Mm-hmm. So if there's an imbalance in the order book and there's not enough bids and offers to absorb that, we're going to lead to excursion. Sure. So yeah, I mean, it does. You're right on, man. Like, it's going to show up differently in lots of different products, because every product has kind of their own behavior. Mm-hmm. But I think of it a little bit like if you're driving down the interstate, and you're or let's go a different way. You're in a drag race and somebody gets off the line, and they're 0 to 60 in 2 seconds or whatever. Like, how long does it take them to slow down?
Yeah.
Like,
right.
there's so that, and I don't know that those impulsive, participants that I'm joining want to go to the same destination that I want to go to. But at least I can get into the trade and then kind of see how it develops from there. So at this point, I now have some information that there's been rejection of higher prices. I'm below the ETH VWAP here. So we're actually going to slow this down to 1x speed so we can kind of see that.
All right, so we couldn't get higher. There wasn't enough participants, seemingly. We've ranged across that existing range of value, and now we're going to expect testing of the lower side of that established range.
So we're at least looking for this to push below halfway back. So we're testing halfway in the session. So if we can get back above the ETH VWAP, then that could be a clue that I'm not right. But if we fail at halfway back, then there's a pretty clear field for us to push and see here like that red flash. So there's some selling imbalance that stepped in underneath the VWAP. Here's some more selling imbalance. It's in here.
And we can see that down there at the delta volume.
Yep.
So what are you thinking now? Do your signals start being, I wait for a break with heavy volume and then I look for a pullback? Is it that traditional entry so you can have a good risk profile, or is there something else you're doing?
So right now, and you'll notice like I'm adding into this position. All right. So, but now I got back to where let's pause this. So now I got to where those buyers stepped in. Let's do some volume analysis here. A couple things, like where those buyers were earlier. You notice that green band went away because we absorbed that imbalance. There are some new buyers.
And just to make it more basic for some people who might not understand that, is previously there was an imbalance of buying pressure.
Yep.
And price made its way back there. And now if you looked at it historically at least in the window of what we're looking at here in this window of time, now it's sort of an equal amount of aggression has played its hand there.
Yeah.
So it's not as substantial of are there buyers defending this?
Yeah, because we can't necessarily know if there are still buyers. So what causes these prices is, and I used to do this when I was doing a lot of hedging. So like let's say somebody says, hey, you got to do 500 contracts in this product, and the client wants X price on that. Okay, great. And there's 5 on the offer. Well, if I put 500 contracts on the market, I'm going to get a call from the CME. Because they're going to be like, you're going to like blow. I mean, you could, depending on the product, like we were doing like illiquid ag products. Like I could have moved the whole market to go limit up or something by dumping that. Right. So instead, like if people are maybe familiar with the term iceberg orders. So we'd have software that would say, okay, I'm not going to present 500 to the market. I've got 500 to do, but I'm just going to like let that out in 5 order increments.
Right.
And it just auto sets. Well, I don't know, like nobody else but me knows when I'm done with that order.
Sure.
Right. So if you see, we call them Gandalf levels. Like it's like if you're Lord of the Rings fans, like, you shall not pass. Like if you find this price where it seems like we hit that price and we just keep bouncing off it. We hit that price. Likely that's the case. Is there's an auto hedging program out there. Somebody's got to do a massive order. They're not going to present the whole thing at a time. It's big enough that like every time you hit it, it does like move the market up a little bit. So when you see where the initial lot that goes out, that's what creates these order imbalances. When I come back into it, I don't know if I'm going to come back into kind of like the next tranche of that. Right. So that's why, like, as I come into this, I'm going to peel a little bit off, because it could be one of those where we bounce off a little bit. And then again, if we can't accept back up in here, we're going to, and we roll back in this direction, that's greater clues that order's kind of out of its way and the path is clear to push back towards my target.
And I think another thing that's interesting is, with the unknown of an iceberg and the depth of an iceberg is if enough selling pressure is going in. I mean, think about it from their perspective. If there's enough selling pressure coming in and they're trying to buy, they're going to be happy to start moving them. Like, okay, well, there's so much selling pressure, we can get a better price. We know inevitably we're gonna cause another imbalance in the market to make the market move up. Again, this isn't just what happens every time. It's just, you might have, like, I've got a buddy who worked at Goldman, and he would get in positions of like 15,000 CL lots.
Yeah.
The time it takes to get that in there and the amount you're willing to let the market move just to get the size on the tapes on the filled is you're eventually going to move the market. But if people are willing to sell, I'll go down in price. I'll keep lowering in price.
Absolutely.
As long as I feel like I'll get filled eventually and get all my liquidity. So
absolutely.
Yeah. But you never know. So that's the thing. It's billboard. When you see 100 contracts on the sitting on the books, it's like most of the time you're probably not seeing it's not just 100 contracts. It's just that's what they're willing to show of their hand to try to get liquidity there and everything else. Anyway.
Absolutely, man. Spot on. So let's talk about like using the volume profile in here. So this is where these 30-minute profiles come in. So we've had this big move, but now can we accept these prices? Can I find some build out in the profile that shows that there's willingness to do business at these prices and shift the imbalance towards lower prices? Okay. Otherwise, if this thing just tapers, I'm going to go right back up to where value is. So now
is there a time segment there that you're thinking like, is that intuitive? It
is somewhat intuitive, but I'm looking at here, like up here at 621 is the volume profile the VPOC for this 30-minute period. So I can look at that and go, okay, well, how much volume would I have to do down at these prices to shift the 30-minute VPOC from 621 down to 5? I have to spend a little bit more time here and a lot more volume, right? So it's a good clue to be like, okay, let's just kind of, chill out for a second. See if we can, spend some more time here. Let's speed this up. Now I've also got the sell stop in here to add more, because if we just flush through the Euro IB low, we're getting closer to that prior high and closing the gap, then I'll add in the size on that.
So was this earlier or yesterday you added at this point? You're already in?
Yep.
Also, guys, just so you know, we do have 60% off if you guys if you're ready for an assessment and you want to start and take a shot. If you're not ready, we have practice accounts. So just sign up with the account size that you think is appropriate for your risk and your strategy and try it out. Don't go wasting money with us or any prop firm until you feel like you have something. And the practice accounts, although when you pass them, you don't get funded, putting even just a little bit of money into a program like that, it's $20. It's better than just doing a sim on your own. You're not going to feel anything, at least with the practice account.
Yeah, I can't highly recommend
of wanting to complete it.
I can't recommend that highly enough. So I don't know if you noticed, but the VPOC shifted a little bit lower, and there was this yellow number here. There's some sellers that stepped in right when we came up towards the ETH VWAP. So we are accepting these prices. So I'm adding some more size in. Now, where am I wrong? What shouldn't happen? And this is part of like a playbook trade. I know where the destination is. I'm looking for 494. Okay, that's great. I know what this trade is. It's a third period reversal. It's one of these where we've been progressively moving higher. The probability that we're going to continue that is low. If we fail past these references, we're increasing the probability we're going to fail. That's great. What should happen? I should continue to stay below ETH VWAP. I should continue to find an acceptance at these lower prices. I should not be able to get back above halfway back on the session. I should not be able to get back through the open. I should not be able to get back above over. So there's a range of prices that I'm like in my head, I'm like, absolutely should not be able to get back in these, or I'm most likely wrong.
Mm-hmm. And that's so you're making that decision of I'm a 100% exit. This is a stop.
Yep.
Not get to this level and see if it continues or see if there's enough delta. Okay.
Yeah. So like right here, there was a little spike there, but it wasn't spiking, above an area or accepting above an area. We're still building out acceptance in kind of like this lower distribution. So there's no risk yet that like, man, I'm wrong on this. Mm-hmm. And sometimes it happens that, and this is part of like the getting into the position, getting out of the position, is that, sometimes it happens where, something spikes or there's a news event that like, takes me out, but then I go, okay, but is the opportunity still there or not? Like, is the opportunity to like close the gap and push toward closing, is that still there or not? And it is.
Do you like to keep a position open? Do you size down during the actual announcement if it's an event that's like that, or do you flatten and get back in, or how do you kind of
It would
work
depend
around?
on how violent that announcement would be. Like if it's a news event that is an unplanned release, like we've been having a lot of them, right?
Sweet.
You almost have to have some news channels open just to see if like Trump's talking on Air Force One or something like that. Like in those, you just get stopped and run over. But if it's a planned event, then I'm typically not in position. So okay, so let's stop this right here. A couple things that I'm seeing that are like confirming that I've made the right decision. So one is, and this is in the market profile. So see this. There's a range of prices that we've only traded in that first hour. So that's what we call selling excess, meaning I went into those prices and I came back through them. So, or other people might say that's a tail. So there's a tail up here that is shutting off. So as long as that tail holds, and I stay below that, then that's increasing the probability that I've got to go and keep moving lower towards those destinations. I'm now into the second 30-minute of the initial balance. I'm still below each VWAP. I'm still holding and developing value lower. I've got some poor lows down here. So this is all saying like, yeah, great, stay with it.
Right.
Keep
No reason to get out. So one thing we
right.
haven't really approached here is how you're dealing with what some people might simplify to risk to reward. Clearly, it's somewhat dynamic, and you're not trying to force the market to be like, I always go for 3-to-1s or I always go to 2-to-1s. You're seeing some asymmetric probabilities here. Market's still on your side, and you're just taking it for what it is. Or is there something more fixed?
Yeah, no,
that you're doing.
So let's step back to the higher time frame here for a second. So let's talk about like where the destination is, and here's the area that we were entering, right in here, and here's the area that I'm defending. Essentially, that's my risk. This is the reward. That's a risk. That's a risk reward, and it is dynamic, like because every opportunity isn't the exact same. If you are so typically when I'm auditing someone and they say, well, I do a 3-to-1, I'm like, okay, based on what? They're just like, well, I just want 3R for my 1R. Gang, the market doesn't care about your 3R.
Right. Which I also warn people because they'll take it another step. And I get it because there's a human tendency to have like, how can I just have 100% objective thing where I just make money all day and my risk is all taken care of. I don't have to do the math. But it's dynamic in terms of don't set. I'm a guy who I just go for 20 points and I risk 7 and I just have it fixed under all conditions, under all markets. Is, I never like to say never. It will never work, but long term, I have yet to see someone that does something like that across all markets with no sense of like what's the current ATR. Like you need some dynamic market structure or market context to make that work long term. I'll say that for most people. Again, there's always exceptions, but for most people, you need something dynamic as the market. Yeah,
I can't agree more. Yes, needs to be dynamic because market ranges change in products throughout the year. Like people will say like, well, what should I have as a daily goal? Your daily goal, like for me, a good day is I captured 25% of the available range. Well, that's great because that keeps me dynamic.
Sure.
Right. So if it was a 100-point day, I want 25 points. If it's 200-point day, I want 50 points. Like it's dynamic to what is available to you. So that means when the markets are really wide, I'm getting a bigger cut of it because that's the worst is when you're like, well, no, I want my $200 a day, and then you're squeezing blood out of a turnip in the summer when the ranges are constricted, and then you're leaving way too early when markets are really moving.
So right now, it's still holding. It still looks like there's good seller pressure. There's not enough buying interest.
Yep.
To shake you out of this trade. So I'm going to guess that it heads towards your target.
Yep.
I'm curious now. Maybe we can fast forward a little bit just so it gets there. And by the way, guys, we are all set for the giveaway. We'll be doing a giveaway in a few minutes. I just want to kind of wrap up at least this trade, and then we'll get into questions and we can go in more depth. So yeah, we're going to fast forward a little bit. It's going to head down. So you got those, what we kind of mentioned and I said was reasonable targets. What's going to be your decision of that was my first conservative realistic target and I go all flat? Do I leave a runner? That's always on people's minds. You mentioned it before. People were like, oh, I missed out on so much of the trade.
Yeah.
Under what conditions would you trail this, if ever? Or would you stick to what's the highest probability target?
Yeah. So, right now I'm at 17 contracts. So up here, if getting to this target, I'm going to take 3/4 of the position off. And then it would be, I think on this one, I was using weekly VWAP as a reference. It's like, as long as I stay below weekly VWAP, I'll trail it.
Okay.
But,
I'm trailing would be based on different major market points of interest for you, whether it be anchor VWAP locations. Okay.
Yep.
Reassess, like, are we still moving?
Yeah, and in this case, it was we got outside of the initial balance is what helped us kind of, because we're right here above the prior high. We're real close to we didn't close the gap in the first hour. We were close, but what I wouldn't want is I wouldn't want acceptance back inside the initial balance. I wouldn't want acceptance back above weekly VWAP. So at that point, I just set weekly VWAP as the reference and let it be.
And is there situations? Someone had a question here, and I think it's relevant. The whole idea of the market moves in your favor, you're going green. Do you move your stop up to break even to turn this into scratch or win? Or do you find that over the longer term, you're actually losing money?
Yeah. Based on a playbook opportunity. So one of the things is like, how soon does this, come into play? On that specific playbook, I mean, the expectation is that would happen in the first hour. It didn't. So once we got below, like 530, which was IB low, then I moved my stops down to like 550, from like the 600 area. So I did at that point. I was like, okay, this isn't happening exactly the time frame that I typically look for this playbook trade. So I'm gonna get a little more conservative in where my stops are, and in case it's not working out, because it's the what shouldn't happen. Well, what should happen? It should happen in this period of time. Well, it didn't. Okay, well, so maybe I need to be a little more cautious.
But you would sit, so it wouldn't just be price distance. So like, let's say it very quickly jams down 80% to target.
Yep.
You're not going to move your stop. You're like, nope, I don't care how far back up it goes. I'll take the full risk. Okay.
Yep.
That's good.
Yep.
I think that's applicable.
Yep.
So the time anchor is really what sort of seals the deal for, okay, we built enough value down here. If we start traversing higher, there could be a chance that we're going to be testing new highs.
Yeah, absolutely.
Okay. Cool. All right, let's go to the spin or the marbles or whatever we do. Okay, spin. And the cool thing, Josh, here is some of the names can be difficult to read, so we always let our guests read out the winner. So
let somebody else butcher the name.
Yeah, this should be for, I think, a $200 credit on the desk.
Oh, that's awesome.
Go.
All right, is this Nessa or Nisa?
Well, then congrats to you. Let's do another one. And I don't know, Josh, if you want, we can get a little crazy, and if you have something you want to give, like a call with you or something, feel free.
Oh, yeah,
we didn't
absolutely.
discuss it before, but
Bob Shin.
Bob Shin, way to go, dude. All right, you want to spin it for what do you want to do? Call or a
like I'll do a free hour with somebody.
There you go, free hour, with Josh.
Ryan.
All right, cool.
We're gonna turn you into an ATM, Ryan.
A volume profile ATM. Okay. Yeah, they're saying let's do one more spin if we can hit more likes. How many likes are we at? Sometimes I question sounding like a.
We're at 76.
Okay. Well, we'll start taking some questions, and if by the end we can do it, we'll get 25 more likes, we'll do another spin. Okay. I didn't log in appropriately on the stream here. Raj, could you start popping up some questions? All right, you did. Yep, a little dig Aaron's got. All right, Josh, I'll let you take the lead on most of these questions, but technical analysis and price action and prediction are the same. I can't know if I'm more profitable guessing randomly.
So let's talk about like technical analysis. I mean, technical analysis is not predictive. So in markets, it's prescriptive or descriptive. Technical analysis is describing what's happening, right? It's another way of organizing price information, which can be helpful. People will often ask me like, how many technical indicators should I have? And I say, well, it's kind of like makeup. And like, what do you mean? I was like, well, how much makeup should I have on my face? It depends on your face. Like if it's helpful for you to have moving averages or RSIs or all manner of things, that's great. But make sure that you know what's the math that's generating that indicator, what it's actually showing you, and how that's folding in to make a decision. And if you find anything on your chart that's not helping you make a decision, get it off. Like it's just noise, right?
And I also like to say, try to make sure you don't overlap too much with the same answer each one is telling you. So, for instance, having like a 9 EMA and an 11 EMA is like, hey, make a decision.
Pick one.
You don't want to have like 4, 5, 6 ways of determining cumulative delta. So you have mixed signal. It's just too much information. Yeah. We're still human. There's a certain amount of intuition we can get, sort of like driving a car. You start driving a car and you learn the basics. I need to turn on my turn signal, move lanes. Eventually, you start noticing signals around, like what's the walking, the crossing light color. That's going to tell me how soon the light's going to change. Is this person kind of shifting too slowly, maybe not noticing me behind me to the side? Those are the intuitive things I think that we can pick out in the market, and it's based on the car you're driving and everything. You get comfortable with the situation and you can pick out those intuitions.
Yeah, man. Spot on.
Where is the market going? That's a straight up answer.
Higher or lower?
Yeah, it's going to go higher, lower, maybe go sideways for a little bit.
It's going to move from 486.
Yeah. Won't stay there forever.
Yeah, won't be there forever.
But, I like to say the market's probably just don't be the guy that's, again, necessarily trying to top tick or bottom tick to the tick. Assume more of the same until you have a reason to think it's not going that direction. So right now on a shorter macro view, we've been going higher. There's an opportunity for a trade right now for a pullback as of yesterday. If we break this range, there's good risk profiles for taking a short. But am I at a higher level thinking I should be looking for shorts? Probably not. So just assume the market's probably going to do. You're probably not picking the single candle. That's the one that's going to turn the entire market away.
Absolutely. Topping is a process. It's a process.
Exactly. We have a little bit of a criticism, if you want to take that.
Sure.
From Mark from Delta and Tom, isn't as simple as it sounds here?
Yeah, it is.
Yeah, it's not easy.
But
the problem.
What about trading is easy?
Yeah.
Like if you want easy, go do something else.
Yeah. The thing that we try to do is just give you put a lot of different traders that are doing well in front of you. Let them kind of talk about their thought process, and then hopefully some little piece of it can click. Yeah. But there's no way, and if there's nobody showing you, here's a 2-week course that you're going to be good. You're not going to have any interaction, and you're going to do well in it. It's just not. It's like saying you're going to take guitar lessons in 2 weeks and go do a world tour in a different language and be able to do the lead solos. It's like it's just going to take time. There's just no way about it. But giving yourself the information and the tools and maybe some understanding, pick up some tidbits from this. You might get one thing out of this that puts you a little bit more on a successful track, and that's all we can hope. But this is in no way us saying it's easy. Just look at volume profile. Hey, it's going up. You've got a great trade and it's going to win.
Yeah.
This is the result of Josh understanding the struggles, going through the struggle himself, trying to really iron in what he's seen, take some of that institutional knowledge, and we appreciate that he's doing that.
Yeah, and I got an unfair advantage too, right? I mean, have had the opportunity to work with institutional firms, and like, so it's easy to know, like, well, that's not helpful, or that's, snake oil, or like, that's not useful.
Yeah.
Which we all, like, anybody that trading's not your day job, you have some other day job that you like gain competence in, and like confidence comes from competence.
Mhm.
So what I find fascinating is people try to come to markets and think that they can get the competence faster than they do in any other thing that they do. Like,
There's something about, I almost like to say that the most amazing thing that the market does is convince people that they know what's going on.
yeah.
Yeah, that's like, it's really good at that. And the better it does that, it's sort of like the anti-algo, If you're
Yeah.
going to make the most efficient algo in the markets, it would be the one that confuses and makes people feel like they're doing the right thing
Yeah,
most
yeah.
often.
Yeah, absolutely. Well, one other comment about like learning. So I got I don't want to call him a friend anymore. An acquaintance, Josh Kaufman. He wrote a book called The First 20 Hours, and it's how you can like gain skill in, like, you can go from zero to fairly competent in just about anything in 20 hours. But there's a specific system and approach for how you acquire that skill. Now, the 10,000 hours after that is where you're like building the reps and really making it work. But you can get a pretty decent framework pretty fast.
Sure.
Understanding all the nuances and stuff that takes years.
Yeah, I don't think there's a way around it.
Yeah.
It's primal. Okay. Thanks, Shervin.
And to teach the full picture from the basics to advanced application, then it's better not to keep things vague in general.
I don't know if I agree with that. At some point, you got to give people a high level idea. We can't sit here for months explaining it to you at this level of depth.
I teach people the full picture all the time, but it takes 6 months. They don't want it. They don't want to do it in 6 months.
Yeah, so this is Josh's website here, tradewithprofile.com. I will put the link in the description and also up on the screen.
Josh has a great, very hands-on course paired with, basically, it's more so about the hands-on learning and working with Josh. So,
yeah, it's
we
taken.
Definitely suggest it. Raj has worked with it, and I think another one of our guys has.
Yeah, I mean, two things you have to accomplish. You have, like, there's three. Well, here's a specific simple thing. If you're in it, you didn't have to do anything with me, but if you're going to be in markets, I think there's kind of three objective focus that you need. So one is, if I'm looking at any market, what behavior is this market behaving? There's 4 behaviors that every market, if you stop at a moment, it's behaving. Well, you need these tools to discern which behavior it's exhibiting. Is it in rest? Is it in a move? Is it testing, or is it another move? Like, it's one of those 4. The next is, I need to be able to have a playbook trade that answers 4 questions that I can categorize and repeat. That's like, what's the destination? What am I willing to risk for that? What would tell me that I'm right? What would tell me that I'm wrong? Like, can I categorize that? Can I journal that and know that I'm good at it? And then the last piece is, where am I personally on the spectrum of development? Like, if you're familiar with like the 4 stages of development, like stage 1 is I don't know what I don't know. Stage 2 is I know that I don't know. Stage 3 is I know that I know, but it's like clunky. And then stage 4 is that it's intuitive, right? So like, your job is to figure out and get to a place where you trust. So stage 3 is like, I trust what I know, and it's a system, but it's just clunky because I got to get the reps in. The reps is what makes it intuitive. And at that point, then that's the people that you see. They're like, oh, I need to be short here, or I need to be long here. And it seems like it's an instinct, but it's honed. Like, it's not, it didn't come overnight. It was like something that they had to fight hard for. Right?
It's like trying to play a solo in the middle of a jazz song.
Yep. Absolutely. Yep.
You got some more questions for us, Raj? Makes money call today. You can't swing overnight. Yeah. So what? There's definitely a lot of psychology component that people like to talk about in trading, and it's valid. You do have to be able to execute according to your plan, and psychology often gets in the way of that. But I tend to, don't worry about that so much early on. Find a way to execute, and then make sure you have something that's working, and make sure you're looking at it more analytically and you're being more objective, and fill in the gaps of psychology after that's happening. But if you're going out there and you don't know what you're doing, you don't have a plan, you don't have a sense of how you want to interpret the market, or what, how you're coming up with hypos, and context and narrative, then of course you're going to be nervous. Of course you're going to be scared. Of course you're going to have inconsistent results. You're going to war, and you're just like, oh, we're just going to go out there and fight the enemy. You can't do that. So don't heavily focus on the psychology so much early on. It will always come up, and it's always a thing, and we're all dealing with psychology issues. But base it on something where it's like, no, I feel really, really good about my plan and my structure, and I'm just unable to follow it maybe fully. So then fill in that gap. But yeah, you're not going to follow plans that you don't have intuition to think that they have a long-term viability.
Typically, the hot take is that most of the people that say that they have it's a psychological problem, it's a skill issue, just like what you said. Like I just don't have
the psychology component could still be there, but we don't know because you don't have a skill.
What typically they're experiencing is that because we're all pattern recognizing animals, so they've identified a pattern of market behavior, and they go, oh man, if I was disciplined enough to wait for that pattern every time, I would be successful. But there's missing components around that pattern of behavior of like, was there a specific time that it was there? What's the typical excursion off of that? How many instances have there been over the last 5 years? Like we get a recency bias and think, oh, I saw that 20 times in the last 5 days, so I should be able to build a trade around that. No, so it's more a skill issue than it is a psychological issue. The more robust psychological problems come when you've got a solid playbook and you've done the work, and you need to go from 5 contracts to 50. Like that's a struggle, because all of a sudden that P&L is going, like that's a legitimate psychological challenge,
So when you were doing institutional and you were, executing on behalf of clients and doing it on larger size, was that less of did you feel confident in what you're doing because, they're just trying to get a price in a range, they're holding it for a longer term, it's not my money? Like how did all that kind of go into your head?
No, it still freaks you out because you got a risk manager who's who can see every trade that you're taking, and they're like, what are you doing? So I still, like, if you see me trade live, you'll see me doing 5 or 6 micros or whatever. And this is what I love about micros and slave accounts is that I can hide the size where I can't see it, and I can just execute on the smaller size. So then, okay, if I'm, and typically, 5x or 5 to 10x, whatever I'm looking at. So I don't have to think about it, and I don't get freaked out by it.
Okay. Yeah. So you do copy trading then as a way to, at this point, or do you mean in a different way?
I think that's what the vernacular is, but I'll take kind of a smaller account, or a smaller size that I use as kind of like the one that I'm executing off of and everything else. And obviously you can't just fully trust that. You got to be able to check it every once in a while. Okay. Right. But it keeps me from starting to hyperventilate sometimes.
That's good. Yeah, that's good. I think the current culture right now is definitely people want to really dig into. I have 20, 30, 40 accounts across these prop companies. I don't like to call them, most of them prop companies, but
they're not prop.
Yeah, prop-ish carnivals. But they try to go. They move it across 30 accounts, and they're like, I just need to make $100 a day, across 30 accounts, and it's an interesting thing. And I don't blame traders for doing it, because it's the opportunity that presents itself. It's a weird derivative market of a derivative market, but if it's working for you, then that's great. Just don't assume you're going to trade 100 contracts in the NQ the same way, just because you're split across accounts, if you ever went live with that kind of configuration. But you're not even going to be able to go live with that configuration. So,
yeah.
But it's interesting to hear. Did you do that institutionally? Did you find that maybe a risk manager, would they ever do that? Would they ever start copy trading you? for size? Everyone always wonders about that. Like,
No, so I mean, a couple different things that we would do. So one is we would do an average price system account. So you can do these custodial accounts that allow you to aggregate buy power across multiple accounts. So you're basically just executing in one. And that's a risk reduction. But then if I had, several clients where we couldn't aggregate those, then I could actually tie, like TT is one of the trading platforms that you can do this real easy with, that you could tie, multiple accounts and have routing rules based on,
let everyone know we can get you TT when you're live, but I believe it'll be about $800 a month. So
yeah, it's not
get
cheap.
you excited.
Yeah, unless you want to do like some, crazy custom spreads, I would say there's cheaper alternatives that are just as good.
Which we have someone doing that already in CQG. It's got some good options for the spreads. So.
Yeah.
Do we have any more questions?
This is awesome, guys. Thanks for that.
Yeah, I really appreciate you coming on. Again, if someone can just take one thing out of everything they learned today, or they can follow you over at your program. Josh has similar values to us, where he just wants to help people.
Yeah.
Every time Josh and I talk to someone, we might learn something about ourselves. So it's not a one-way street with how all this works.
Absolutely.
Is AI the start of a new industrial revolution? I could
I'll
talk
let you take that one, bro.
on AI, but just to give you a sense, I'm usually using 3 or 4 agents when I'm coding now. I review all the code. It's almost like I have extra team members. But I think my guess on this is industrial revolution was what, 200 years? Mm-hmm. We're going to see something as big or bigger than the industrial revolution. This is a big call out. But I would say we'd see the same kind of a change over the next 5, 10, 15 years. Mm-hmm. It's gonna push hard. And that's not even with much of an advancement needed in the AI. It's just going to be an adoption. I've been solving solutions for big companies for a while, and the rate that can be done, and essentially reduce, workers. Things are changing. Bet on AI, and don't just be a naysayer about it. Give it time, and really spend all the time you can. If you have any plans of being in a working market, figure out what AI means for your skills.
Yeah.
Build on top of it. Don't just wait for it to take your job. Be one of the ones that knows how to use it to make your job better.
Facts. Yeah, the ability to use it to automate as much of your trading approach as possible. Like automate whatever you can.
Please do. Yep. It's moving fast. So it's a very inefficient market. Companies that don't know how to use it and companies that do. So there's going to be a gold rush of using AI. Some of it's going to be, overkill. It might bubble a little bit in times, but on the long tail there, we're not going back.
Yeah.
What kind of platform does Josh use?
So I should MotiveWave today is where I use MotiveWave primarily. I use a CQG data feed, so I'm using CQG data inside of MotiveWave. I find it pretty light and responsive. I mean, there's sometimes where I wish it was faster at drawing charts. So when I'm looking for like fast charts, I'll use TradingView. They're just great. I use TradingView a lot for alerts because again, if I'm not at a certain price, I don't care. Let's go do something else, and then
and you just have to text you like completely a step away.
Yeah.
Okay. Yeah. And would you ever take a trade on TradingView? Like, would that give you enough information where like I'm going to get in? This is my area.
No. So typically, if I get an alert, we have a bot now that like for all of my playbook trades, I get alerts on like, hey, here's your playbook trade. It doesn't mean execute. Like it means now I'm going to look for a good place to enter.
Okay.
But at least it saves. There's this romanticized idea of like, I want to be in front of screens all day. No, I don't. Like, I want to go do other stuff. Like, if I'm going to do markets, like part of it is the lifestyle, so setting alerts, let it get to certain prices, and then go pull up a chart and then be able to like take a look at it and decide if I want to do something or not.
I guess I'd be curious there then. Does the time of day matter much to you in terms of it's getting to my zone, everything looks good, but it's 2:30 in the afternoon or 2 in the afternoon?
Yeah.
Okay.
Like my
You'll skip the lunch window sort of?
I
Unless there's
do.
a
Well,
excessive volume?
unless we're in a trend day. If we're in a trend day, then I may look to be active. Or if there's like some planned catalyst that we're expecting over that time, then I've got a playbook opportunity that I look for entries over that period of time. But or if I hit some certain price, I might. But it's all playbook defined. But I kind of have playbooks that happen like at the open, kind of through the first hour, up until lunch, through lunch. What would I do in the afternoon? And then
so it is all playbooked out. So you have different playbook, and you'd segment the time window that works best in.
Yep.
Great.
Absolutely.
Okay. And we hit 100 likes, so we're doing another spin.
What?
You got lucky with the names so far, I'll tell you.
What we got here? That KN?
Okay. Congrats, Gayan. So if you, well, I guess we're doing 2. All right. Let's see what we got.
Hey, you.
Cool. Yeah. So we'll send you. You'll get an email from Raj within the next 24 hours. We'll give Josh the email for the guy who won for him.
Yep.
I don't know if we have any last minute questions or someone asking about merch. We do have a store that we're about to start sending items from. You can see I'm wearing some stuff. We will get that so people can get the merch themselves, but I think a good idea, send merch to people that hit certain milestones. That's definitely been an idea of ours. We just haven't done it yet. So Philip, if you're in our brokerage and you did well, send us a message. I'll send you a shirt. Okay. Cool. Yeah. I really appreciate the time you gave us. I highly suggest everyone watching, check out Josh's stuff. This isn't the only interview he's got on the web. There's a lot of content out there with Josh. And then again, he's got his own program. And like he said, he offered up similar to what we do. If you want to have a conversation with us, we'll make a window of time. We'll go over things with you. And, it's good. It's a good vibe to put out that kind of positive energy into the community. And both of us do that. So
yeah, it's hard enough. I think I've got 40 hours of Q&As that, anything that I would teach anybody is on that. If you want to go through that, go for it.
And that's just on your website,
it's
open,
on YouTube.
Or
yeah,
you just mean interviews everywhere.
Yeah, we've done over time. We've done like Q&As that we just record and throw out there.
Okay.
Or just ask me anything kind of stuff. But our program just helps you like sync that up and take you in a methodic path. But if you're like, hey, I just want to digest it, you can go do that.
Great. And that's on the Trade with Profile YouTube channel.
Yep.
Okay. Great. All right. 60% off. Raj is showing me again here. This is ending tomorrow night. 60% is the highest we do. Just as an opportunity to get people in. It's all in with the price you see. You can split the price. It'll be a bigger overall cost, but for the most part, what you're looking at, that's the all-in price. Just pay once, come live with us, come work with us, have calls with myself and my team, and let's all keep practicing this trading thing and getting better together. So thank you guys. Have a good one.
Yeah, thanks everybody.